Hey there folks, this is Ed from APLYSIALAB.com, and in this video we're going to discuss the topic of trend. What is trend in the financial markets? A lot of people will tell you to trade with the trend, and the trend is your friend. You need to identify it and trade in the direction of the trend. This is what people say. So today we're going to backtest one of the most common ways in which people like to identify a trend, which is the moving average. So people will say only buy when price is above the 200 moving average, or only buy when price is below the average. Or they'll use a different period, maybe 100, maybe 400, something like that. So let me show you a chart here. So it's a similar idea to the moving average crossover. So, in this chart you would buy only, and this would be something people would do in combination with another strategy. So they'll get a signal from an indicator, and then they'll only take the signals that are above the average, something like that. So, you would buy, let's say when price crosses, or when it's simply above. You would buy when price is simply above the average, so like this, right? So anywhere kind of here would be a zone in which you would buy. That's the idea, or one of the ideas in defining trend and trading with it. So I'm going to discuss a little bit more at the end of this video. How does that actually work? What is it good, and what is a better way to do it? But first let's backtest this, right? So again, similar to our previous video on moving average crossover, we are going to do here basically a buy anytime that the price is above the 200 SMA, and we're going to sell anytime the price is below the 200 SMA. So the logic is very simple. And another thing you would want is, no open buy orders and no open sell orders. So no open buy orders and then you buy, and no open sell orders and then you sell. Because if you just buy at infinitum, then you will go broke very fast. So in order for this to be a fair test, you can only buy one position at a time. You can only sell one position at a time. And we're trying to get some good statistics here, right? So this is our logic. I actually prefer the space there. Just gonna double check that it looks okay. Okay, so we're gonna do Aussie dollar. I'm gonna do Aussie dollar, 5 minute, and we're gonna do a year, right? Start of 2020 to the end of 2020. And again, since this is 5 minute, we'll use 2400 period. So that's the same as a 200 on the 1 hour. Okay, so we're gonna run this and we're going to see the results. All right, so we'll come back when this is done. Okay, we're back. The back test is finished. So let's take a look at the results here. All right, so we have quite a flat line here. So you can see again the legend here, the long versus shorts, and the bottom is both of them summed together. And you can see that it's fairly even. Same as buying at random, pretty much. Here we have 180 losses, 180 wins, and 365 trades. So more or less 50-50 win rate. So it's the same as buying at random. So this idea of there being trading with the trend, it's an interesting concept. And the idea is that you buy when the market is going up and you sell when the market is going down. But if you think about it, that's not really strategic thinking, because if you buy when the market is going up, you might make money if the market keeps going up, but if it goes down, then you're going to lose money. And this is what this is showing. It's the same as buying at random. Okay, so now let's try something different. I've added another condition here, similar to our last backtest when we backtested the moving average crossover strategy. We would open buys when the averages crossed up, and we would open shorts and close the buys when the averages crossed down. So we're going to do that now, except with market price and the 200 SMA rather than two averages. So here we have, for the buys, we close the sells before executing the buys, and for the sells, we close the buys before executing the sells. I hope that wasn't too confusing. So one thing for this to work is it is done with no stop loss or take profit. So what I'll do is I'll just make my stop loss and take profit 1,000 pips, and that will never be hit because we're kind of using the 1 hour time frame here as a point of reference. So 1,000 pips, very unlikely to be hit, probably will never be hit. So this is it. Let's run this and see what this looks like. Can we take advantage of the trend? Okay, we're back. The back test is done. Let's have a look at the results this time. Looks very similar to last time, but actually the performance looks even worse. It's actually losing more money than before. Of course, I do still think probably over time it ends up being 50-50 as well. So we had mostly losses and a few wins, but the wins were significantly bigger than the losses. And this is interesting because it really did cut off the losers early, and it really did let the profits run. But again, the problem with doing that is that you're gonna lose a lot more often. So if you could find a way to make the profits run without losing so much, then you have a profitable strategy. But that's really it for this one. So can you think of any better ways to identify a trend? Like I said, I do not think that this is a good way to identify a trend. All you're saying here is if the market goes up, then buy. If the market goes down, then sell, which is not a good way to give yourself a statistical advantage. You can do that visually, and it would be practically the same as using the moving average. I don't think there's any value to using the moving average to identify a trend. Perhaps we can try with a different type of moving average. If you have something in mind, comment it below in the comments, and perhaps we will try it. So, if you enjoy this video, subscribe, hit the bell notification, and interact with us. Leave us a comment. We will be posting a lot more very good content. So, subscribe, and I'll see you next time.